General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
Okay, so week 2, notice the bearishness is way in the lead. So it has me thinking week 1 could be a Judas. Week 2 and 3 could be expansion to the downside. Then week 4, the retracement, kind of like setting up low of the year. Kind of how the seasonality is. Go to the seasonality. See, so low January, February. It's giving me those vibes. So we in week 2 of February. And bear sentiment is pretty heavy, 42%. News, we also got CPI this week and Fed Powell, but I'm thinking CPI be like the turning point of the week since it's usually the main attraction. Unemployment is usually good too, especially since the Fed, I think, is focusing more on unemployment coming up. After NFP, I noticed the CME Fed Watch, the percentage went up for no change. So holding rates, it's not necessarily bullish. We want to see ease. We want to see this column go up for bullishness. Earnings this week, nothing significant. I like Datadog and Coinbase. I like crypto, but there's nothing here I feel like I should watch for NASDAQ sentiment. Now, Palantir went crazy. The AI play, it kind of pushed NASDAQ a lot. The other earnings really didn't move it that much. The COD data, commercials are short. You can see here that the commercial line is actually starting to come up. So they sold off. I want to see sell below lows, but how this week is set up, maybe all we need is previous week's low. Even here on the COT data, it's got a 12-month sell program. Starting to come back up to equilibrium, but we're still in December's range. Open interest is rising. Monthly profile, still in December's range. Actually, this is January's range. Still in January's range because it's February now. So this is January's range as well. No, this is this is January's range. Still in January's range. Don't look like we got high or high or low of the month. Put in yet. Week 1, return back to equilibrium. Of the weekly dealing range. No strong sense of direction. On the daily, we did get Friday selling off. So we have a bearish OB candidate. We will see if we retest this level. Will we get a reaction? Lower prices make sense. Even down here makes sense. So let me actually find this tag. So I'll be bold enough to say that's the weekly draw. And as far as like yearly profile, so let's do this. I don't have too much of that color. Previous month low. Nas100, previous month's low. That's where we can get the low of the month, I'm thinking. Weekly. Daily. What is this? 2940. So let's go here. I like 2940 at the failure swing liquidity. It's a target for a weekly objective. Preferably in premium of the dealing range, of the daily dealing range. Daily dealing range is here. This swing high, this swing low. We've been just stuck in it. This is EQ, so maybe something around here. This order block, the target here, premium or discount. H4, I do like the inefficiency. It's a target. I'm thinking retracements and lower prices. With CPI giving us a good stop hunt for a big move. The H1, fair value gap's way up here. Note the fair value gap. We got a fair value gap here too. But note the fair value gap with the body line does kind of make sense. So if we H1 this would be our range box. So we have a 3-bar swing low here, 3-bar swing high here. Let's do it this way. I want this down candle. Nope. Let's make this blue. This would be the breaker. Really 50% of this. Something up here. Fair value gap here. Order block created an imbalance. Note the fair value gap lines up with the open price of the daily order block. Have a lot of levels in premium to stock sales. No news Monday. Let's take our time. And wait for a pivot of the week and see if we can get a one shot, one kill. If not, little scalps intraday, 20 points, 50 points. But we want that move of the week because this is fairly large range and we swept this already. We don't want to overthink it on Monday either, so. All right, we got our levels, we got our plan. We got our target for the week. All right, y'all have a good day. Peace.